Everybody coming in the room. Glad to see your face up in the place. So welcome to the call. Lesson 4 is where we at tonight. And we were just talking about a homework lesson we had that we always go over when we finish lesson 3. And we feel at lesson 3, we talked about some things, enough things that when you watch this movie that you see a lot of stuff that you have learned in the first 3 lessons. And we like to talk about it because it's a movie that's about trading futures. But the most important part is the fact that it's a movie, that's about trading, and it shows a lot of things that we can learn from trading. Even though this movie is what we would say outdated because it was in the 80s. And one of the things that's different about the way trading is done now from that movie is that in the movie they were still doing trading in the pit, which was called outcry trading. And futures is all digital trading right now. So it's not being traded in the pit anymore. So that's one of the big differences. But you still get to see a lot and learn a lot. So we want to get into that in lesson 4. But let me turn the call over to Barbara and let's get going. Over to you, Barbara.
Yes, sir. So here's our disclaimer for Futures Commodities Trading Group. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means that you alone are responsible for your actions in any trading or investing activities.
So you can lose money trading in the futures market?
Yes, sir, you can.
I'm not going to win every trade.
You're not going to win every trade. Nobody can.
Oh, man. I thought I was going to win every trade.
No, well, the only expert is the market itself, so you can't win every trade.
Oh, man. But I love the fact that I can take a course. I can go through some lessons that teach me how to limit my risk, though, right? I like that.
Exactly.
So we always have quizzes throughout the week in our group. Normally the quizzes are about the lesson that we covered on Sunday, and we have some questions from that lesson. And Dr. Mel always does a great job with going through the quizzes for us. But tonight her protege is gonna step in for her, and she always does a great job as well. Thora, Miss Thora Sanger, are you with us? Can you get us through the quizzes tonight? Do you have them? Are you ready?
Yes, I have it. I'm ready.
Okay, over to you.
Here goes. When it comes to the charts, the daily, weekly, monthly, and yearly charts tell a different story. Which time frame do we prefer to use more than others? I'll say it again. When it comes to the charts, the daily, weekly, monthly, and yearly charts tell a different story. Which time frame do we prefer to use more than others?
Mm.
Is it the daily?
Monthly.
Okay. Okay, I'm getting in the chart 6 months. Let's see.
Did somebody say something, Thora?
Ezra wrote 6 months, and J. King 6 months, and I think I heard Tanya said monthly.
All right.
Yeah.
So what do you think, Thora?
It's
Are
a
they
monthly.
right?
Yeah, it's the monthly and the 6 months. That's our target.
That's right. Great job.
Yeah. And we have another one. Should I go ahead? Okay.
Go ahead.
Okay. Most futures contracts are bought or sold again before they become due. I repeat, most futures contracts are bought and sold again before they become due. Is it A, false, B, true, or C, not sure?
True. Be true.
Okay. Tanya says B.
Yeah.
Okay. Franklin Smith says true. Lucky Reed says true.
Right.
Yeah.
So Thor, you think, does anybody have anything different? Anybody think different from that? But talk to us, Thor. Are they right?
They are right. It's B, true.
Yes.
All right. Contracts are bought and sold many times before they become true.
Absolutely. Great job. Great job. That's it. We only had 2 quizzes, right?
Yes, sir.
Okay. Thank you so much.
You're
So
welcome.
we got a homework assignment to talk about before we jump into lesson 4, and it was a movie that we looked at called Limit Up, and we had a conversation about this movie a few minutes ago before we started the call. It's an old movie, and you know, probably didn't have the biggest budget when they made the movie neither, right? Even though we seen a couple familiar faces, it still was kind of low with the budget, I would say. But the education in this movie, when it comes to what we do as traders in the futures market, this is why we like to watch this movie, so you can get a visual of what we do and get a little better understanding. Helps you see it from the visual standpoint. And let's talk about it. Let's go over it. So we got some questions here. I'm gonna skip down to the next to last question. I want to ask that one first, and I wanna interact during the homework assignment, y'all. That we can interact and talk. I want y'all to unmute and talk to me. But the first question I want to ask you, in this movie, we got a chance to see 2 guys who were partners. They were business partners, and they traded and they worked together. And one was named Chuck, and the other one was named Marty. And we've talked about the fact that you can have 2 different type of traders when it comes to trading. And I want to ask you all, see if you paid attention to this in the movie. What type of trader was Chuck? Chuck was the older guy with the bald head. He was the older trader. Can somebody tell me what type of trader was Chuck?
Fundamental.
Chuck was fundamental. And that's correct. Chuck was fundamental. He traded by the news. He wanted the tip, the gossip. He wanted Casey, who ended up becoming part of their team. He wanted these tips. He wanted her to tell her the rumor, what she thought was going to happen. And he was a fundamental trader. And now his business partner was named Marty. What kind of trader was Marty? Anybody remember Marty?
It was technical.
He was a technical trader, correct. He wanted nothing to do with Casey's tip. Matter of fact, he told her, I go by my charts. You know, he didn't want to know anything about what she thought the market was going to do that day. He was a technical trader, and we got a chance to see both a technical and a fundamental trader in this movie, with Marty being technical and Chuck being fundamental. So here's the thing I want to also mention. When it came to this movie, I want y'all to think about the fact that they was trading down in the pit. All right. And in order to trade down in that pit, to be a trader standing in that pit, you had to purchase what was called a seat. Even though they were standing, they had to buy a seat in order to be able to trade in that pit. And to trade in that pit was a privilege. If you were a trader trading in that bean pit, boy, you people looked up to you. They had a lot of respect for you because you had earned your way into that pit. Anybody know what the cost, how much it costs to have a seat in that soybean pit? Who can tell me?
500,000.
500,000. Just to be a trader in that pit, it was 500,000 for a seat. So that's the level and caliber of the trader that were in that pit, in that bean pit. Yeah. To me, that was mind blowing. So another thing I always like to point out or ask just to see if we paying attention. Can anybody tell me where that movie was taking? Where did they take this movie take place at? Who noticed from the beginning of the movie where they were taking film the movie?
New York City.
New York City?
Chicago.
Yes.
Okay. So do you know, does anybody know where, so soybeans is one of the, remember we talked about the different commodities that trade in each different groupings. Anybody know where soybeans trade? Where does soybean trade at?
In the Corn Belt.
In the Corn Belt.
Chicago.
Anybody know? There we go. In Chicago. Chicago Board of Trade. Excellent. Great job. Now, also, think about this now. What I really enjoyed about this movie is that it came back to some of the things we talk about with the rules. One of the things that really was going on with Casey, she wanted to be a trader. She was a runner, but her goal was to be a trader. And she really wanted to be a trader real bad. And then she finally became a trader. She got the opportunity to become a trader. But one thing that she really lacked when it came to trading, anybody know that what was the main thing that Casey lacked when it came to trading?
Seemed like it was confidence.
Confident. Very good, Jamal. That's what her main issue was. She lacked the confidence, which goes back to our rules. And she didn't have confidence when it came to trading, but she eventually got the confidence and became a very successful trader, right? We seen her now being interviewed and having her picture on the cover of the magazine, and she she had a very successful trade multiple times, but this one particular time, if y'all paid attention to this, they were walking out of the exchange, after the day was over, at the end of the day, and they were really happy and celebrating Casey having a great, amazing day this day. And if my memory right, it was 400,000 or 500,000 she made that day.
500,000.
500,000. You remember that?
Yeah.
500,000
Mm-hmm.
she made. Now I'm gonna explain something that we haven't went over yet, but something that you need to know because you heard the word probably on the last call about point value and things like that. But I want you to understand that point value is what we need to know how much every point is, or every tick. When you see, oh, the market was down 8 points. Okay, well, what does that mean? So in soybeans, every point or every cent is really referred to as cents when it comes to the grains, but every cent that it moves, whether it's up or down, each cent equals $50. So if soybeans traded up 2 cents and closed up 2 cents, it was up $100. Each cent equals $50. Hope everybody's following me. That's the point value for soybeans. We're gonna show you how to look that up and find that so you would know, well, how do I find what the point value is? We're gonna go over that. But I want you to know this to understand the point that I'm getting ready to make. Every point or every cent equals $50 in soybeans. The day that Casey and then walked out excited and celebrating and congratulating her, soybeans closed up 2.25 cents. It was up 2.25 cents. Now Jamal just said she made $500,000 that day. Well, Devin just said each point equals $50. So if it was up 2.25 points, how much is that? How much was it up in monetary value? $112.50. So wait a minute, Devin's saying 2 points equals $112.50. 2.25 point equal that much. Jamal's saying she made $500,000 that day, and it closed up 2.25. Anybody know why she made that kind of money off the market only moving 2 points? Who could tell me? How come she didn't make but $100? Why she made $500,000? Help us out, Laura.
Because she had multiple contracts.
Because she had a lot of contracts. Remember, we trade with contracts. Remember, we went over a futures contract and what it was, you know, the definition of it. And that's what we trade with in the stock market. They trade with shares. In the futures market, we trade with contracts. The reason she made so much money off such a small move, she had a lot of contracts. I forget the number, but Norma Jean had did the numbers and told us how many it was, but it was a lot of contracts. So I'm always amazed that, you know, when you trade with that size of account, you don't need the market to make a big move to make a lot of money. You just need prices to move, like we always say, right? But that was always something that blew my mind when I watched that. Now, another question I want to ask you all: did everybody pay attention to when Casey went to class? When she went to class to learn, you know, so she could get a trader's badge and be able to trade in the pit. When she went to class, was anybody paying attention to the instructor and what she said about the market? Did anybody pay attention to anything she said? Anybody remember anything she said in the classroom?
Yeah, I remember her going over. I remember her going over the hand signals and what they meant.
She went over the hand signals, and another thing she pointed out, Jamal, she talked about the importance of why the market existed, and you know.
Yes, yeah. She defined the importance of the market. Yes.
Yes.
I do remember that now, man.
Yeah. That's why I tell y'all it's so much you can learn in this movie, but you're gonna miss it the first time. You like, man, I don't know what we watching this movie for. I don't see nothing, but it's just a lot you just didn't see. After we start talking about it, you're like, man, okay, all this stuff was in the movie. Now, when in the beginning, Casey was working for someone, and she ended up losing her job because she gave a tip to Chuck, and Chuck made a lot of money off her tip, and then he gave her a little tip, a little bonus for for the tip. And her employer got upset when he saw that. And one thing that I want to make sure we did catch. Now he said something very important too. You remember in the hallway when she was talking to him about being a trader and that she knows she could be a trader. And he said, "Do you understand the importance of what it is that I do?" And she said, "Yeah." She said, "Yeah. Soybeans is one of the most important markets." Anybody know what he said when he corrected her? Did anybody catch that part?
The most important market.
Very good, Ezra.
Yeah, the most important because like it
Yeah,
was the main protein of the food supply.
yeah, that's right. She said, "Oh, soybeans is one of the most important." He said, the most important market."
Mm-hmm.
I tell you, man, it's a lot of education in this movie. Trust me, if you watch this movie more than one time, you'll see so much that we can't even take and sit and talk about because it'll take us too long to go over all the stuff. One thing I also want to point out in this movie, the movie's name Limit Up, and you're gonna learn what that term and what that word means. Also, when we go look at some things on a website called Bar Chart, you're gonna understand what that is. But in this movie called Limit Up, we got a chance to see what happens when the market trades in what's called a limit move, where the market only has can move only so many points in either direction, and it's called a limit move. One of the best things they ever done when it came to trading futures, they implemented trading limits. The market trades to this limit, and trading is halted. There's no more trading that day because it's reached the limit. It can't go up any more points, or it can't go down any more points. When it goes up the limit, that's called limit up. When it trades down the limit, that's called limit down. So the name of this movie was Limit Up. So they gave us an example to see how the market is and how it reacts when it's trading so fast and so volatile and trade to the limit. In this case, it was a limit up move. Does anybody remember the scene when the market traded limit up and how wild and chaotic it was?
Hmm.
Did anybody catch that part? Nobody's seen that part. Does anybody even know what made the
Yes.
market trade limit up? Did I hear somebody?
Hold on.
So let me break it down. So what happened? Why did the market trade limit up in the first place? So if you remember when Nike came to Casey when she was at lunch, and she told her,
Oh, I remember she spread the word around about what she was telling her that it'll go limit up. The market will go limit up if she spread that particular word around the trading floor
Didn't she?
about Russia.
Yeah.
Russia.
now
Yeah.
why was she
'Cause-
spreading Russia around? Let me tell you why. Why she was spreading Russia around. There was a announcement being made on a huge export sale, and everybody was waiting to see who was gonna be buying the grain. Who was gonna be the big exporter?
Mhm.
They were gonna be buying from the U.S. And at this time, this country was the biggest and the number one importer of U.S. grain, and it was Russia. And because they were the number one buyer of U.S. grain, anytime the word Russia was mentioned around the exchange, people went crazy.
Mm-hmm.
So you couldn't even say the word around anywhere around the pit, and it would drive. It would just drive everybody go crazy. What's going on in Russia? And what happened was the announcement came out that the U.S. grains was going to Russia, and the market went crazy. Anybody remember that?
Mm-hmm.
And it went crazy and traded limit up. And when prices hit limit up, that was the end of trade. In this movie, they kind of add a little more drama to it by making Nike made the market kind of shut down. And but the point was that that's how fast and how crazy it was whenever it was trading in a limit move. It was that crazy. It looked like they were fighting in the pit.
Mm-hmm.
And
Yeah.
now I said earlier that Casey really didn't have the confidence when it came to trading. She got in the pit and she wanted to be a trader, but she didn't have the confidence. She didn't believe that she could do what she wanted to do, even though she wanted to do it bad. She just didn't believe in herself. And as it went on, she did. She gained the confidence and became a real good trader. Matter of fact, she became so successful, it became to a point where she decided that she no longer wanted to be on board with this deal she had made with Nike. She didn't want to do that anymore. She had, sold her soul with Nike, and she didn't want to go along with that anymore. And she decided that she was gonna do her own thing. She wasn't listening to Nike no more. Matter of fact, she decided that she was going to change the direction of how market was going to trade that day. She decided to buy contracts for all their clients, all their farmers that they traded for. She was going to buy soybean contracts for them and help them make money. Anybody remember this thing?
Mm-hmm.
Now, in this scene that just started to unfold, one of our rules came about. Remember, one of our rules is control your emotions and how emotional trading is. We see a lot of emotions being, when it came to this movie. We seen Marty got really excited. Well, Chuck got really excited about the tip when he made a lot of money from Casey's tip, right?
Mm-hmm.
Okay. But what about the fact when Casey put in an order and she put the order in wrong, and she wanted to be selling, and instead she was buying. Anybody remember that scene?
Yeah.
And Chuck was about to have a fit. His emotion went all the way. I'm talking about he was about to have a fit.
Mm-hmm.
And she got out of it just in time, right before the market closed, and they broke even. Another thing where we seen the emotion, going back to what I was talking about when Casey was she was on the computer getting all these farmers accounts. When she started trading in the pit and buying all these contracts in these farmers accounts, what happened with Chuck? Anybody remember what happened to Chuck when he found out what she was doing?
He said she was
Anybody
going to
remember?
I think he got upset.
said she was going to go to jail.
Yeah.
He said she was gonna go to jail. Then what happened to him? Anybody remember?
Did a heart attack? Okay.
He had a heart attack. That's when we
Mm-hmm.
talk about trading can be so emotional. He asked her how many. He said, how many did you do? How many? She said, all of them. She went all in with those contracts. I think it was like in the millions she had sold. I can't remember. She went crazy with contracts, and when Chuck heard that, he had a heart attack. So it was just going back to the rule on that particular thing. But the last thing we always mentioned was that the fact that she went to jail, like Lucky just mentioned, and why she go to jail? I thought trade futures was legal. Anybody know why she went to jail?
She was trading for other accounts, right?
Yeah, she was not supposed to be doing what she was doing for those farmers, and she was doing that without their permission. But what she was doing made them a lot of money though. Anybody saw that? She did it. She did it for their good, and and to go against what Nike wanted her to do. And you saw her confidence, and when it came to that too. But did she corner the market?
She almost did.
She almost did.
Yeah, she got it collapsed just before she cornered. Like all of the blocks came falling down just before, because the girl that came and picked her up said you almost cornered the market.
She almost cornered the market. Yeah, and a situation like that happened in real life, guy. So I don't know if everybody know that onions used to trade in the futures market a long time ago, and I forget the guy's name who did something real similar to what Casey did, even though he wasn't doing it for a farmer's account, but he came so close to cornering the onion market that President Nixon actually started a onion act and banned onions from trading in the futures market, and then that act was formed. It's called the Onion Act, and it came from this guy almost cornering the futures market in onions. So I don't know who all knew onions used to be something we could trade, but President banned onions from futures market because of that. Oh man! So if you get a chance, go back and watch the movie. I'm telling you, with way more than we can even talk about. We could go the whole hour talking about all the stuff that was in this movie. But you probably didn't even know this much was in there until we start talking about it. So that's why I say it's really educational when it comes to what we do. But thank y'all for watching it in the movie if you did. And if you didn't, I want to encourage you to go back and watch it. And if you did, watch it again. Because I've seen it so many times. I still see stuff every now and then that I haven't seen. So awesome. What we got, Robert? What's our lesson 4?
Lesson 4 is very interesting. It is on the 50% retracement.
Whoa. We get into the charts. We've been talking about that word since we started lesson 1. And that was 3 weeks ago, 4 weeks ago. And now we come to a point where we start looking at charts and getting into learning how to read charts. And some of you may be familiar with how to read some charts, all kind of different ways people read the chart, but some of you may not have any clue to understanding anything you see when you look at a chart. Well, I used to be that way at one point. Barbara used to be that way. Joshua used to be that way. At some point, we all had no clue what we was looking at. So don't feel no way. Don't get overwhelmed when you see a chart because you don't know or understand what it looks like. I don't see what they talking about. You will start to see it, okay? Now, we just heard Barbara mention a word that you're gonna hear a lot too. She said called 50% retracement. And what is the 50% retracement? Something we use so much when it comes to the charts, right? I think we probably use it more than anything when it comes to the chart, Barbara. because it's so much a part of our system and how it works using the 50% retracement. And I get to see how different people use 50% retracement sometime online, but the way we use it, it has a very important role in our system. So let's talk about that. When we look at charts, when we go on a chart to look at a chart, 50% retracement is so important to us. It's the first thing that we want to do when we look at a chart. We want to figure out what is the 50% retracement level on the chart. Now, Barbara, how do we figure out what the 50% retracement level is? Is there a way to figure that out?
There is a formula that we use, and we take the highest price on the chart. It usually has a half moon above it, so it makes it easy for you to know what it is. And we add that to the lowest price on the chart. It also has a half moon. That line is covering it, so you probably can't see it. There's a half moon there, so it makes it very easy for you to know, and that happens to be the number 1 on the chart. You add those two together, then you divide it by 2, and that gives you the 50% retracement. That's our formula.
You say you add the highest price that's on that chart, and then you take and add it with the lowest price that's on the chart. Add the two numbers together, and you take that total and divide it by 2.
Yes, sir. And that gives you the 50% retracement.
And it gives you the 50% retracement. And this is our first thing we like to do when we go on a chart. When we look at a chart, if I say I want to look at the soybean chart, and I go look at the soybean chart on the website called Bar Chart, when I see the chart, first thing I do is do a 50% retracement on that chart. On this chart, Barbara, where is the 50% retracement?
It's at 348.5, this purple line, right straight across in the middle.
Okay. Now on this particular chart, okay, you use this chart for a reason. Do we have a 50% retracement on the chart?
Yes, we do. It actually traded right through it.
It traded right through it. What you mean, Barbara? How do we have a 50% retracement?
Well, with a 50% retracement, is when the market retraces back 50% of the previous move it just made. So if you look over here where it says previous move, and it made a new number 1, it traded back down. Where it says market makes its 50%, it went straight through its 50% and made a new number 1 all the way down to the bottom. It actually traded and kept right on trading through it. If you look at it, you can see where, if you look at over here to the previous, where it says previous move, look at the bottom, and you see how it traded all the way through to the far right, and it went past that, so it made its 50%.
Nice. And one of the things I like, Barbara, about the 50% retracement is that the market will make multiple 50% retracements over and over and over again on the chart. It will keep making different moves to the upside or different moves to the downside. And it'll keep retracing back 50% of that move. And then it'll make another move to upside or downside. Then it'll retrace back 50% of that move. It just keep doing it over and over and over. And I love that because that just means more opportunities for us. But this is one of the first thing we do when we go on the chart. We do our 50% retracement. Now, you get your calculator and it'll help you do the math. As you can see, I think Barbara already has it on the chart. But when you're doing that highest price and lower price and dividing that total by 2, you can use your calculator and determine where that 50% retracement level is. And you'll understand here in a minute, why that 50% retracement level is so important, why we use it, and why we want to know what a 50% retracement level is. All right. Well, what you got here, Barbara? Talk to us. This another example of the 50% retracement again?
Yes, that's another example. Let's see, this one is, oh, that's soybean meal, the first one. This is soybean September 24. This is another example of 50%. So you see the highest price on the chart was 12.32, and the lowest price was 10.22. So I took the highest price and I added it to the lowest price. I divided it by 2, and it gave me a 50% on the 6-month chart of 11.26. And if you look again to the far left, you see where it traded up to its highest price, but then it began to trade back down. That's when it made its 50%. That's the purple line in the middle going all the way across. We have to get as good as Delvin and Mr. Johnny, where they just look at the chart. They don't have to use the formula, just so y'all know. They just look at the chart and see the 50%, but you know, everybody else got to get that good. But
Over
if you
time, you will.
over time you will, you got to get that good. So let me point it out to help you visualize it. Look to the far left over here where the purple line is at. It traded up to its highest price, then it traded back down. That's when it made its 50%. So look straight across and you'll see that it made its 50%, and it kept trading through it, just like the previous one.
Question.
Yeah, we're gonna have some questions for sure. Yeah.
Barbara, could you
Definitely hold them.
can you circle around where the highest point is at? Is that where the arrows point at?
Yes, sir. It's at the top. It's a half moon there. It's where the
Okay.
arrow is at. That's the highest price on the chart. If you see, there's no other line that's higher than that. Just if you look down to the bottom, there's a half moon. There's no other price on the chart that's lower than that. Those
Okay.
are your highest and lowest prices on the chart. That's your formula.
Okay, thank you.
You're welcome. And we'll answer the questions at the end. We'll get to that in our Q&A part.
Awesome. Okay.
That's feeder cattle again. Highest price on the chart, 273.92. Lowest price, where the half moon is at, 245.14. You add those two together, divide by 2, it gives you the 50% of 259.53, straight across the purple line. This is your 6-month chart. But it makes it easy for you because it puts those half moons there. So you can easily spot the highest and lowest price on the chart. That's done to really help you.
Nice. Okay.
Okay, this is another one. Highest price, lowest price. You see where it traded back up. It came down, hit the 50%. This is on the 1-month chart. And it even traded back up to it. It traded back up to the 50% and it kept trading across until it came back up past the 50%. So what it did, it hit your target. Your 50% is your target. That's the purpose why you're in the market. So when you go in, that's the first thing you want to look for, to see, so you can know the direction that the market is headed in and what it's going to take for you to get there. That's the first thing you need to do. This is considered your target. The 50% is the same thing as your target, which is your profit. So when it hits this, you would have made a profit. That's your target. That's the reason why you're in the market.
There it is, y'all. What I've said. What the reason why we even using the 50% retracement, why it's so important to us to do this when we go on the chart. Barbara just said it. It's our target. When we get into the market, we use the 50% retracement for our target, our exit strategy. This is where we are looking to see the market trade to. So we have an entry and we know where our exit strategy is, where we want to see the market trade to that target. And because we know it's a good chance, not always, it's a good chance that it could retrace 50%. That's our target area when we get into the trade, like Barbara said. That's why we get in. We got a target to trade it to that 50% retracement level. All right. Look at this one. You look at the two arrows, you see the highest price and you see the lowest price. If you look at that arrow at the bottom, where the lowest price is, when the market changed directions and started to retrace back in the other direction, it traded back up to the 50% retracement level and beyond. It kept going. But in this case, we probably retraced back 75, 80%. But as you heard me say, one of the things I like how the market keeps retracing over and over. After it got up to where it traded up about 75, 80%, it kind of traded sideways for a minute. And then we start trading back down. And it went down another 50% of the move, of that previous move. And then if you look at the market, that downtrend from there, it changed direction again and it retraced back 50% again of the move that it just made again. And it did the same thing again. Changed directions, retraced another 50% over and over and over again. I'm gonna tell y'all, Eric McBride would go crazy on a chart like this. He loved 50% retracement. So this is something that you can see happening over and over and over, guys. And why we want to keep reiterating the importance of it. When we get into a trade, this is what we're using to get out of the market. So as you can see, like I was saying, the market will just keep retracing 50%, keep retracing 50%. And the more you look at charts, you're gonna see this over and over and over and over again. All right. One thing I also love about the 50% retracement level, when it comes to when we get into our formations, we watch for certain formations that form on the chart. When we get into our formations, this is really gonna come into play looking at the 50% retracement level, because we talked about the fact that we use the 6-month time frame when we talked about our quiz earlier. And as you can see, this 50% retracement is what time frame, Barbara? That's the 6-month 50%.
This is 1 year.
It's 1 year.
Mm-hmm.
So we also, yeah, we also can have a 1 year 50% retracement, and we can have a 6-month 50% retracement. And you know, we use those, we use them both. So that's why we talked about time frame that we get into. So just know we're gonna be going over this and going over this, and it's gonna click, and you're gonna say, okay, I get it. Okay, makes sense. But right now, if it's your first time seeing it or hearing it, you may have some questions, and that's good if you got some questions, because we want to get your questions answered. We want to talk about it. But just know when it comes to the 50% retracement, it's the first thing we do on the chart. Okay, keep that in mind. And also remember that it's our target, it's our exit strategy out of the market when we get into a trade. We haven't went over our entry to get into the market yet, but this is our exit to get out. So if you want to know, well, man, well, how I know when to get out? How you know when to get out, Bob?
When it hits your target, when it hits your 50%, that's when you get out.
Just when you get out. All right. Great job. Great job. Now, I know y'all just had a call the other night, and I heard it was a really good call. Well, all of them always good, right? But I heard y'all had an excellent call this week, last week, and
was very informative.
I was kind of disappointed I missed it. I was like, man, you know, I know y'all was gonna breaking some stuff down, but are y'all still gonna be on first and third with the next call?
Yeah, for the month of March, yeah, to be the 3rd.
Okay.
Yes, sir.
So the first week and the third week of the month is when you can get on the Thursday night call. You went through the lessons, and now you're ready to get going. And you need that push, you need that to get going. And that's what this call can help you with, along with a whole lot of other stuff. But that's one of the things you hear me saying multiple times about, because I know where people get stuck at. We go through the lessons, we go through the course, and I'm saying, hey, let's go, y'all, let's do it. And I know where y'all get stuck at. And the hardest part is getting going, getting people to get started, and get on the call with these ladies, and they'll get you past that point where you can get going. So appreciate y'all doing that call.
You're welcome.
Yep. All right. Man, I don't even want to see this flyer no more. And I meant to say at the beginning of the call, and this flyer just helped me remember. I want to continue to ask everybody to keep our friends, our buddy Johnny B in your prayers, so we can get a speedy recovery and he can be back with us, but just so he can be feeling better. So let's remember Johnny and keep Johnny in our prayers if you would. I appreciate it. Yeah, man. I'm so ready to hug y'all and love on everybody. I'm tired of looking at this flyer, man. I don't want to see it. If y'all ain't came to Arizona yet, oh man. Well, we've been doing so many podcasts and so many. We was even on the radio station the other day, and we've been talking about this event, and so many people excited about this event. And boy, I don't know with the hotel. I don't know if they're gonna be ready for us, boy, because this gonna be traveling trade number 3. It's gonna be epic. I'm excited, Barbara. I don't even want to talk about it no more.
I'm excited as well. You guys, you gotta get there. You gotta get there so you can really, really learn. There's gonna be as you can see, we have great mentorship that's gonna be there teaching us and things that you can't get on the Sunday night call. That's why you want to be there. If you're not there, you're gonna miss it. It's not gonna be taught on the Sunday night call. So you gotta be in the building to get it. You gotta be there. So we want you
Barbara,
there.
I'm excited about the fact that we got people that's coming back again from the last retreat.
I know we got repeat retreat attendees is gonna be
But the thing
coming.
the thing I'm really excited about is how far people are traveling from.
Y'all, we got people that don't even live in the US that's coming this time, way from Trinidad, from Jamaica, from England. That's huge. They don't even
Yeah.
live in the US and they are coming. That's how
So,
important this is.
so that means if you live in the US,
You
you
gotta
got to
get
be
here.
there.
You gotta get here.
If they coming from that far, we need to see y'all. I'm ready to put my arms around you.
Exactly. You gotta make
All
your
right.
way there. We're gonna have a book signing. We got a manual coming out, Futures and Commodities 101. You got a lot of great surprises for you guys. We want you guys there.
All right. Thank you, bro. We got Q&A, y'all, and I know we went over some stuff that some of you may have just seen or heard for the first time, and some of you may be familiar with it. We went over what's called 50% retracement, and it was our first chance to look at charts, as we go through our lesson. And what I want to do next time when we come on, I want to go to the website that we use to go over those charts. Where did Barbara get those charts from? And bar chart. We want to go to bar chart. We're gonna break down something that we need to know when it comes to trading futures. Whenever we keep talking about a contract, what is the contract and what it looks like? Whenever you want to know anything about any one of these futures, you go to what's called a contract specification. That gives you all the specifications of that contract. We're gonna go look at a contract so we can understand what the heck that is we keep talking about. Go over all the specifications so we can know, okay, now I see what you're talking about the point value. Oh, now I see about the limit move. We're gonna go over all these things on the next call because I want to make sure we take time to go to bar chart because it's so important when it comes to what we do. We use bar chart for our charts. And I want y'all to know the site to go to, but also know how to go on the site and get to where you need to get to. So that's part of what I want to do next week. But tonight we talked about some charts and something that we look for on the chart. And I know we got to have some questions about it or even some comments about it. And we talked about the movie, I know, for quite a minute, but we went over some charts. Anybody got any questions or comments about what we talked about tonight? The floor is open. Anybody? Everybody
Yeah.
clear about these 50%?
Nah, I'm not totally clear, but I'm introductory clear. But what I but what I wanted to find out was, it sounds like to me that before you start like paper trading or whatever the case may be, you want to first finish the 10-week course and then go to the course with Ms. Barbara, Dr. Melba, and then they help you with the paper trading. Is that correct? Is that what we doing?
We're gonna get into paper trading further along in the lesson.
Oh,
and,
okay, all right.
and how that works. And we want to encourage everybody at that point, to make sure you have your account so you can take advantage of paper trading. And if you don't hear nothing I talked about throughout the whole 10 lessons, you ain't heard nothing else. I want you to remember that I'm gonna tell you the paper trade. If you paper trade, I'm telling you, you will learn so much about trading if you would do it. I know sometimes people don't want to do it, but boy, it's invaluable. So yeah, Jamal, we're gonna get into that further along.
Okay.
All right.
All right.
Everybody clear. Everybody understood the 50% retracement after just going over one short time. Wow, Barbara, you did a great job.
Well, we're gonna see. And does
I know
everybody
when I first heard
really get it? Does everybody really understand?
No,
No,
What don't
no,
you
I don't.
understand? What
Okay,
don't
so like I understood the half moon and the half moon at the top and at the bottom. That's your marker. But the calculations, it being my goal, means what?
go back
Okay.
to that chart. Go back to
is
that
that
chart,
my
Barbara.
This one.
Right there. Okay. All right. Go ahead, Jamal, with your question.
okay? So like the top, the half moon, the top, the highest price, then the lowest price. Then you get you said which is your goal, your target. So is that the target for entry?
Oh,
Exit.
no, that's not your target. That's just the numbers that you have to use to calculate what the 50% retracement is. So it's
Yeah,
not your target.
No. I'm saying, like, after you come up with after you do your calculation, after you do the formula, the whatever the number is, whatever that number is by calculating the top and bottom number, that's the goal. That's the target,
That's
right?
the goal. That's it.
Right. That's what I wanted to be clear on. Okay. All right.
Right. Let me show you an example so it'll make sense to you just
And let
by
me say this while Barbara looking for the example, okay? So we go over the 50% retracement first so you understand that you have that part down, because we're gonna get into what is it that we actually be looking for on the charts. And we have some formations that form on the chart all the time, and that's what we be watching for. And we're gonna get into explaining and how and going on how to recognize those charts and how to trade them. But when you see these things that we watch for on the chart and they take place, and you're ready to trade them, that's when the 50% retracement is going to come into play. Because when you get into a trade, we're going to go over where you would enter the market at. But we need to also know where are we kind of trying to see the market go to after we get in it. And that's where our target comes in. Okay, we get in right here and we kind of liking or trying to see the market trade to here. Okay. And that's where we come in with our 50% retracement. Okay, go ahead, Barbara.
No, you basically said it. So I was just showing them on the chart. You know, say for instance, I wanted to get in this area. Well, I would have traded it down to my 50%. I could have got out. That would have been my target. But if you notice here down to the bottom, it traded back up and made another 50%. It retraced back up to the upside. So you see how I made it repeatedly, and it came up here. Just like you said, it, you know, traded across, but then it came back down on this side. It went up here and came back down right to the 50%. It traded back down again, came back up again in reverse, retraced back 50%, hit it again, traded down here, hit it again, came back up, traded down, came back, we traded down, came back up, hit it again. See how it keep repeatedly bouncing off of the 50%, going up and down, hitting it over and over again? That's what he was just talking about.
Okay, so is the 50% mark this black line right here in the middle?
Right, the line is straight across. Yeah.
Yes.
So you see
Okay,
how
all right.
repeatedly it come up here and it
Yes.
traded across the sideways, but it came back down. So look right here, then it came back down to it. It's 50%.
Okay.
Yeah, but we haven't got into the formations and where you enter and what, you know, we haven't got that far yet, but this is just the target.
Okay.
So you would know,
Because
so you would have an understanding.
So I'm noticing as it goes up and down to my right, because that's how I'm looking at it. I don't know. And it gets closer to the black 50% mark. Is that what we want? Is that what we aiming for it to not go up and down, but hit the 50% arrow dead on like it looks like it's doing as it gets closer to it?
That will be our target, whatever the 50% is, and it's gonna look different in every market. Whatever the 50% is, that's what we would get out at. That's what we would exit out at, and we exit out with a profit. So it's not gonna look this way in every market. Every market is different.
Okay. So is there like a notification to let you know when to get out, or you set your
You have to set your trade up. So what you do with a broker, you set your trade up to automatically get out. It takes you out of the market automatically.
Okay, all right.
Yeah, you set it up. You have to set your trade up. Whatever numbers you put in for your target, when it hits that, it's gonna take you out automatically. Yeah.
Okay.
But you'll learn all of that later on. You know, we haven't got that yet. We're not there at that point yet, but we'll get there.
All right. I just had the question. That's all. I don't want to move too fast.
Great question. And not only that, man, I so appreciate your transparency, man, because you unmuted and said, no, I'm not clear. And guess what? You're not the only one that's not clear, but you willing to say it because that's what we here for, man. I don't know about y'all, man, but Sunday evening is kind of, important to me.
Well,
And if I'm gonna come on here for an hour, I'm not coming on here and then leaving here and not understanding what it is I'm coming on here for. So if I got a question, I'm gonna ask the question. That's just delving, but
yeah.
I can't talk, speak for anybody else. But my point is, the whole point of the Q&A is to get your question answered. So if you're not clear, ask the question. Somebody else want to know the same thing you want to know. They just won't ask the question for whatever reason.
Well,
So
Dale, and I say this. The reason why I'm like this now is because I wasn't like this before. I would sit in class and have teachers going over stuff, and you act like you understood it because you didn't want to be made mockery of in the class. You know how people make it sound like, man, you keep asking all these questions. We trying, you know how it is when when you're in school. So as I matured, man, I'm not gonna sit in a space and don't know what I'm doing and don't ask the question, because that's when, to me, in my personal opinion, that's stupid. So you wasting your time. So that's why I'm asking the question. But at first, I want to really listen. You know what I'm saying? Because sometimes you can get your questions answered in active listening. So that's what I be trying to do too. Yeah.
there you go.
Well,
Thank you, man. And
I'm glad you spoke up. I'm glad.
we
you
we
did.
learn together. We learn together, and no question is a dumb question. And somebody else want to know whatever it is you want to know. So when you ask that question, you ain't just helping yourself. So appreciate that, man. Yeah, I
No
know
problem.
when we in school, especially when we in school as a kid, I know kids can be cruel. So
Yep.
yeah, on our level, we all adults, and we should all be mature enough at a point now where we can ask questions amongst each other. Especially, we like a family when we come on here. So if you got a question, there's no dumb question, and ask that question, because I know that's what I did. If my mentor was still alive and I was able to get him on here, he'll tell you, shoot, I asked so many questions. He had me come to the front of the room. Tell me what you're talking about. And I'll go to the front of the room and point it out and go over this and that. And if I don't get it, I keep asking questions till I get it.
Mm-hmm.
And every single time, everybody in the room had the same question. They just didn't say that, but they all say, "Man, I'm so glad you came up and asked that question." But I was the first one to ask questions when I was learning this, man, because I wanted to know it. I had already decided this is something I wanted to do, so I was serious about it. So once I made my mind up, this is something I wanted to do, I wanted to really understand. Cause Barbara made a point one of the podcasts we was on, when she do something, she see it all the way through. So once she made up her mind to do something, she gonna see it all the way through. And I'm kind of the same way. I was raised by a Marine, man, and the way that he, raised and taught us, man, it's that stuff got instilled in me, and even to, like there's certain things that just weren't tolerated in our household. Like one thing was quitting. Nobody was allowed to quit nothing. If you started something in our house, you better finish it. My grandfather didn't play that quitting thing. So, yeah, man, I get it though, bro. I appreciate you, man. You just don't know. You help others when you ask those questions, man.
Okay. Thank you.
Thank you so much.
I got a question for you.
Come
So
on, man.
let's say you got a market price of 57K, and then, or a high, and you got a low of 63. So your retracement is 60. If that were, I don't know, like Bitcoin, and it's trading between 57 and 63, 57, and you got all these retracements, and you got all these, and you get 50% retracements, 50%, and you're always in this band for a while, and you get in the market and it hits your retracement of 60, and then it goes to 120. Do you cuss at all?
What was that? The last point. Somebody said something. I didn't catch the last thing you said.
When it goes to 120, do you find yourself cussing at all?
Well, I'm glad you brought that up. I'm glad you brought that up because
Because you're
what you
talking
gonna
about
learn,
emotions, right? And I'm thinking,
right?
you know, you're on this market and you're like, and then all of a sudden it just goes. And I don't know if you know, Bitcoin's obviously a unicorn, but are there times where, you know, grain or something, is there a time where it just goes like to the moon and you're going, what the hell? And you got out at 60 and it went to a 120 and you're like, or 100, and you're just like, oh my God, if I just stayed a little long, you know, I just wondered.
I'm glad you're making the point because some of you are gonna learn further on in the course as we go on. We're talking about this target, but then as you go on, you'll learn that when it comes to me and my trading, because I've been doing this for a while, when do I get out of the market, Barbara?
You let the market take you out when it hits your stop loss. You stay in the
Yeah,
trade.
there you go. You remember that word we talked about when we went over the rules? Always have a stop loss.
Mm-hmm.
So that target is our exit strategy that we use. But I trade to the target, Lucky. But as long as the market hadn't stopped me out, I'm still in the trade beyond it. If it goes beyond the 50%, I'm still trading beyond the 50%. You understand? Does that make sense to you?
Yeah.
Yeah. I'm still trading beyond the 50% retracement level if I hadn't got stopped out yet. But that's where I'm expecting or looking to see the market trade to. But I'm not necessarily gonna get out there if the market keeps going. You follow me?
Right.
Yeah. I'm going all the way to 120 with it.
Yes,
Yeah.
Lord.
Yeah. So that's just the target. The target is what we want to see the market go to. Now, some of the traders do get out at the target, but if I hadn't got stopped out, I'm still in the trade. If it want to keep going, I keep going with it until I get stopped out.
Yeah, that's what I
So
want. Thank you.
does that make sense, Lucky?
Yeah, thank you. That's what I wanted to know. Thank you.
Yeah. Mhm.
So you being stopped out, is that an operation that you program in, or the market will stop you out?